right, how we doing, Dan? Welcome back.
Morning, folks. Fantastic. Happy Tuesday.
Happy Tuesday indeed, and it seems like we're finally getting a little bit away from the bank concerns. It's been a huge rally in tech, and it seems like it's definitely climbing the wall of worry. Is that what you're seeing out there, Dan, right now, climbing that wall of worry?
Yep, we see folks, back to some patterns that that were traditionally, sweet spot for our traders. The memes and the bank stocks, which I think they're fading out of the bank stocks right now, both the regionals and the majors, and just looking for those intraday, gap up opportunities. There's a ton of small caps today that are up, 100+% that many of our folks are fading and trading. So, for the last couple of weeks, I'd say the last week, once the banking stuff died down, we've been noticing a shift towards that sweet spot for our folks, which is, those intraday gappers, especially in the, lower float, smaller cap opportunities. And for a while that, those were taking places by, the First Republic and other banks like that had some, stigma around them.
Dan, can you just talk about this? And it seems like you're exactly right. There seems like there's times when small caps are moving, they get hot, they start buzzing up, and, you get these opportunities where maybe, and even talk about, we were talking about Tilray a few minutes ago, and I just want to bring you back. Do you remember when Tilray was going 50, 100,
Can I tell you guys,
200, 300?
I was listening, and a couple points about that.
Sure.
I remember, they need to figure out how they handle the halts. Right?
The limit up, limit down's a mess.
It's because you give folks no opportunity to get in or get out, and then all of a sudden, when the thing opens back up, it's 10, 20, and that day, that stock, I don't know if it was a pre-market move when it went up to 300, but I remember vividly it was halted, open up 30, 40 points, and obviously from a broker-dealer standpoint, we provide leverage, and folks are borrowing money, and when stocks are in halting, and you know it's gonna, and you see how it's gonna gap up. Yeah. You see what the P&L is going to look like, and it's just like hurry for the exits. But you also know, conversely, that it is those systems that are really pushing those things up when they're in trading halts. So, I don't know what the answer is on these things, but I do remember that vividly. It popped up there, and I think, came back down like 100 points in a matter of minutes. If memory serves me.
Yeah, it wasn't up there for long, and I do agree with you on this limit up, limit down. It seems like, it works well at times, but the whole point was to bring in liquidity. But now you get these small caps and these news events, and they're like, they open for 15 seconds and then they halt again, and then they open for 15 seconds and they halt again. And it's more disruptive. And I watch, and the limit up, limit down doesn't apply in the pre-market. And sometimes you watch, and the pre-market trading is smooth. And it's going well. And then the stocks open at 9:30 and it's halt, and it's halt, and it's halt. And it's like, why don't you look at what's going on in the pre-market where they're actually trading smooth without these halts, as opposed to trying to regulate, and it's just more disruptive.
But maybe they forego market orders, coming out of a halt or something like that. I don't know, but it's the way that it's handled now is just, it's unfair, really, when you don't have an opportunity to get in and get out, and then things come up or down in your face by, multiple, percentages or points. It's not right. So
how do you manage that risk as a broker dealer here, Dan? Just, curious, because, we don't get broker dealers here on the show all the time. How do you manage the risk? When you've got multiple clients in some of these stocks that are getting these halts, is it how do you manage that risk as a broker dealer?
Well, there's a lot of automation, obviously. It's hard to do on a manual basis, but you do have to have eyes on things because, it's the human that would see and be able to pick up on, on our platform, we have little indicators for limit up, limit down. And as those bubble up to the top, you can see when the halt is going to happen. So looking at that stuff and managing that with larger positions, and managing those larger positions, those are the ones that are the issue. The folks that have really big positions going into a situation where you're going to get a halt. And then when that happens, you don't know where you're going to end up, when the thing opens back up. So mitigating action is best when taken in advance. Obviously, when you're in the halt, you're along for the ride. So we try and get ahead of those as best we can. And there's a lot of automation in sort of managing P&Ls and customers' accounts.
Let's take it back to the small caps here. Just that conversation. You're saying, you're seeing lots, and again, we get these pockets of time. It seems like we're,
It's weird.
favor for a couple weeks, and they go out of favor, and they start to
It's
leak.
weird.
It seems like they have these violent spikes, the whole small cap groups, and then they just leak.
Right.
And then a few months later, they have violence.
And then you're trying to figure out, wwhere is the next attention? Where is it now
Yeah.
focused? Because it's somewhere. It may not necessarily be in active trading, but it may be, attention on, an investment for a couple of days or whatnot. And we're always trying to, stay current with what we're offering to people and providing them the abilities in the areas that they really want to focus on.
Yeah, right now, definitely the AI hype has really started to take over. It seems like there's always some new kind of hype that really starts getting stocks. I'm sure you're hearing it from a lot of your clients right now talking about AI stocks. And a lot of these are some lower kind of volume, lower float type of stocks that you might need, of course, like locates to try to attack if you're trying to go against these names, or maybe hedge like a long that you got a big return and you're just like, all right, well, now I just need to kind of secure this return, right? Different ways to go about it nowadays, of course. And a lot of these are going to be the short locates to get after these names.
How do your traders, and obviously, it's not everybody, but I mean, how do the better traders time these fades? Because it can be really dangerous to obviously, just jump in and say, oh, this stock's up 100%. It's going to come back down to more. I'm going to short it. And then the thing goes up 200% and you're underwater. I'm always kind of spooked sometimes on fading these things. How do your better traders time these fades?
You know what? If I knew, I would be doing it myself. Honestly, look, I've been on enough. I'm not a trader, like I told you guys. I'm still holding the same stocks. But first red candle, looking at volume drying up. I mean, these are strategies that I've never used myself, but there's a lot of commonality when you talk to some of the more, successful traders.
Yeah.
They all have a strategy. And I think the key point is if it doesn't match up with their criteria, they don't do it. Right.
Yeah.
So there's a lot of discipline. Forget about the strategy for a second. I think there's just in terms of the core of a successful trader is their discipline, right? And that's really what helps those folks as opposed to the others. Because look, if you're sitting here staring at the screen all day long every day, it's human nature to want to interact, right?
Yeah.
But if the signals aren't there and the setup doesn't materialize, you don't do it.
Yeah, and I think it's an important thing, like you just mentioned, Dan, that you don't do it. But what if you already got those locates? We'll get some credit back, right?
Yes, sir. That's right.
That's what TradeZero can do for you, right? I mean, get that credit back, because the truth is, especially if you're getting short locates, there's going to be times where you're just going to have to sit on them because the trade setup is just not there. And I think at that point, you need to have some ability to try to get some money back, right? I mean,
that's right. And also paying it forward, right? Keep the next trader in mind. It was maybe hard for you or took you a little while to get those locates. Pay it forward. Market for credit, give it to the next trader.
Exactly. And especially when demand are driving these short locates higher and higher, especially when these stocks are coming out of halts and things like that, that's definitely going to change and shake things up for the demand and the supply that's out there for the stock. It's always great to talk to you, Dan. You guys, like always, you guys see it. We bring it up on a daily for our stocks to watch. You guys check out TradeZero's flagship software here. Definitely check it out, team. And of course, if you guys are ever looking for an extensive inventory of short locates, check out TradeZero. We'll have you back on, Dan.
Gentlemen, always a pleasure. Go get them.
Thank you, Dan.
Always good to have you on, Dan.